What we're seeing, those two graphs are very bullish for gold. Gold is at a high and nobody's buying it, except for, as I said, BRICS and the central banks. That's an extremely bullish sign. And of course, the central banks, when they buy gold, they don't buy in the market. They buy off market always. So though they don't even, they only influence the price on the margin. Still, as I said, there's not so much gold around. And what is now available for purchase for these central banks in the BRICS countries is putting upward pressure on gold. And that's just the beginning, Jan. It's just the very beginning.
Egon von Greyerz, founder and managing partner of von Greyerz AG, highlights the ongoing trend of BRICS countries and central banks purchasing gold, signaling a bullish sentiment for the precious metal. He emphasizes that central banks typically acquire gold off market, exerting upward pressure on prices. Over the past year, gold reserves have increased significantly, driven primarily by a diversification strategy. Key players such as China, Germany, and Turkey have spearheaded a global initiative to safeguard assets amid concerns about the current state of the US dollar. This strategic move could provide insulation in a worst-case scenario for the United States. Despite the traditional correlation between gold and negative real interest rates, Egon notes the current anomaly of higher interest rates compared to inflation. Gold prices have surged to all-time highs, nearing $2,230 per troy ounce, marking the fifth consecutive session of gains. However, light trading volumes on Good Friday suggest cautious market sentiment. Market sentiment is leaning towards major central banks initiating an interest rate cut cycle, spurred by Federal Reserve Chair Jerome Powell's recent statements. Although Powell indicated that the central bank remains vigilant against rising inflation, former Fed officials and analysts anticipate challenges ahead as Powell navigates competing economic risks and a divided group of policymakers. Egon attributes gold's recent ascent to geopolitical and economic factors, including worldwide escalating deficits and debt levels. These factors contribute to the appeal of gold as a safe haven asset in times of uncertainty. Come along as we explore the valuable insights provided by Egon von Greyerz. Don't miss out on our latest updates. Subscribe to our channel and activate notifications. Thank you for tuning in.
Then funds and ETFs who have been selling gold since 2000, middle of 2000, and in spite of a rising price. You know, they're totally on the wrong side of gold, but of course the main buyers of gold currently are the BRICS countries and the central banks, and they are obviously ignoring what investors are doing short term. There will be a point when all of these funds and the ETFs will turn around, and once they turn around, you know, they will be with the trend for a change now, which they haven't been for the last 3-4 years. And that will obviously put more fire on the gold price. So, you know, that development, I think, is what we're seeing, those two graphs are very bullish for gold. Gold is at a high and nobody's buying it, except for, as I said, BRICS and the central banks. That's an extremely bullish sign. And of course, the central banks, when they buy gold, they don't buy in the market. They buy off market always. So though they don't even, they only influence the price on the margin. Still, as I said, there's not so much gold around, and what is now available for purchase for these central banks in the BRICS countries is putting upward pressure on gold. And that's just the beginning, Jan. It's just the very beginning. As you say, normally gold goes up, and we can look at that since the 70s. I remember the 70s well. You know, there was negative real rates, which means that negative real rates means that inflation is higher than interest rates. But now we have a situation when interest rates are actually higher than inflation, which is very, very unusual for gold to rise. But that means that gold is really now signaling there are real problems in the world. Gold is not going up because of technical factors like positive real rates. They're going up because of geopolitical factors, and they're going up because of economic factors and the fact that most countries are running deficits and increasing debt at an exponential level, debts that can never be repaid. And this is why now the world is worrying about what's going to happen to the world economy and to money. Money will have to continue to be debased at an accelerated rate, which means that your money, as it always has done, will go to zero against gold. This last fall started, as we both know, in 71 when the gold window was closed. And now we're down 97 to 99% all currencies against gold. That is real money. And we have the last bit to go. And that is what we're seeing now. And that's why gold is going up. It's not gold going up, of course. It's the value of money going down. And people who don't understand that, they will lose out. They will actually not or miss out on protecting themselves by buying gold at reasonable prices, because at some point it'll be very hard to get hold of gold at any price because there's a finite supply of gold. Since Bitcoin is continuing to go up now, banks have to get into it, funds have to get into it, and ETFs are created for Bitcoin. I am still of the same opinion. It's a wonderful speculative vehicle, serves no purpose. It doesn't from the point of view of replacing gold. It'll never replace gold. It's just an entry on a computer. That's all Bitcoin is. It's got no intrinsic value. Gold has intrinsic value, and remember, half of gold production has gone into jewelry, and some goes into industrial. So, you know, we have the history of gold. So also, which is 5,000 years old against 14 years of Bitcoin. Bitcoin, you know, fantastic for the people who invested in Bitcoin, made a lot of money. My target is still, it could be $1 million or it could be zero, because what central banks decide to do. And therefore, it's not a good investment, and it's a high risk, and it's incredibly volatile, not suitable at all as money or as a replacement for gold. So good luck to the speculators, and I hope they make a lot of money, and I hope also that they get out at the right time. But anyway, it's nothing to do with wealth preservation, as we've always been saying. Yeah.
In February, U.S. prices showed signs of moderation, with the cost of services outside of housing and energy experiencing a notable slowdown. According to a report from the Commerce Department released on Friday, this development has left the possibility of a June interest rate cut from the Federal Reserve on the table. Despite this moderation, the report also revealed that consumer spending witnessed its most significant increase in just over a year last month. Even with higher borrowing costs, the United States continues to outperform its global counterparts, buoyed by the labor market's ongoing strength. The Federal Reserve's preferred inflation gauge, the Personal Consumption Expenditures Price Index, recorded a 2.5% increase for the 12 months ending in February, slightly higher than January's 2.4% rise, in line with FactSet consensus estimates. The surge in the annual inflation rate was mainly driven by a 2.3% jump in energy prices last month. Egon emphasizes that while the current reduction in inflation may be perceived as temporary, inflationary pressures are expected to persist. Expectations indicate that commodity prices, including those of food and fuel, will continue to rise, potentially undermining any short-term reduction in inflation. Let's get back to the interview.
This is not a precious metals rally. It's not a speculative rally into precious metals. This is so far, we've seen a rally in gold. And that rally in gold is because of geopolitical and world economic events, not because people are now rushing into precious metals, because gold is the king of metals. And gold is now being bought by central banks and by the BRICS countries, because they know that they need to actually hold gold to protect themselves in what's going to happen in debt markets and in currency markets. But general investors haven't actually cottoned on to that, because they're still into their stock market investments. And therefore, as I said, it's been interesting. It's been primarily a gold move. I think silver and mining stocks at some point will catch up. But so far, they're way behind, because, as I said, this is a fundamental secular change in the gold market and not in the precious metals market. That's what people's got to realize. Well, first of all, as you know, when inflation was under 2, they said they wanted up to 2, and then he went up a lot higher than 2, up to 7-8% in most countries or more. And then they say they're going to put it back to 2 again. They have got no tools to change inflation. This is political or events outside their political sphere that actually makes inflation move. The interest rates have a very only nominal effect on inflation. So they think now it's going down to 2% again. Of course, it isn't. My strong view is that inflation will remain high, on a global basis, together with interest rates. And this now, of course, excluding food and energy is ridiculous also in these figures, because that's everybody eats something and everybody uses fuel, and they're a major part of most people's spending. So we have a temporary reduction in inflation, although last month, as you said, it was higher, but you're still talking about annualized. If you take 0.4% for the month, I mean, that's still almost 5% for the year. So it's still much higher than they intended to be. Inflation is here to stay on a global basis. Commodity prices will continue to go up, food prices will go up, and oil and fuel in general will also continue up. So the whatever reduction we've seen now is not going to last.
Following a recent rally, prominent price prediction firm Techopedia has issued a strong buy recommendation for gold. According to their forecasts, gold prices are poised to break out and potentially reach a new high of $2,700. These estimates indicate that gold could achieve this milestone sometime in 2025. That's all from us. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.